Welcome to Culturenomics with Arjun. The show aims to unravel the layers of the fintech sector and the rapidly evolving tech startup ecosystem across the MENA region and beyond. I am your host Arjun, and I will be inviting founders, executives, investors, regulators, and other influential stakeholders to discuss and dissect the highs and lows of their own ventures and how they foresee the wider ecosystem evolve. Join us as we celebrate success and the spirit of risk-taking, the candid discussion that goes past the timid question and cautious answers. This show is produced in collaboration with Adyan, a reliable end-to-end payment solution that enables businesses to turn payments into a strategic growth driver. We're also brought to you by Lulu Financial Group, a global financial services provider headquartered in Abu Dhabi and operating in 11 countries. Finally, Culturenomics with Arjun Singh is brought to you by M2P Fintech, Asia's leading payment infrastructure company that enables businesses of any scale to embed financial products. Well, welcome to this episode of Callsign with Arjun Singh. I'm your host, Arjun. Today I'm joined by an old friend I've known for, I think 20 years, if not longer. And he's visiting us from London. So the second I heard he was in town, I said he better come along and join me at the couch. Now, before we start, Amir Nooriala, his full name, has had a long and illustrious career, but he's definitely not 70 years old. No. And I literally had to write down everything he has done and achieved, which is actually quite impressive. So let me roll down what he's done and achieved, because I think all of that will be relevant in the conversation we're about to have. So Amir started his career with OakNorth Bank as their chief commercial officer and chief strategy officer. From there, he went on to become the chief strategy officer of Callsign, which is a leading digital identity firm with presence in the MENA region and actually growing quite rapidly. In addition to that, he is a fintech judge for the UK Tech Nation, which I think is a competition which is run by the government, right? He is an LP at Outward VC. He's a co-founder of North London Group of Angel Investors, where I'm hoping to get an invitation next time I'm in North London. And finally, despite all of the above, his claim to fame is his lovely wife, Claire, who heads Snap or Snapchat, as some of us know, for the EMEA region. So Amir, welcome.
Thank you very much. Very nice to be here.
I hope you're comfortable on the couch.
You got me worried now, but yeah, very comfortable. Thank you.
It's hilarious when I say I've known you 20 years.
Yeah.
Right? And some of those early days I'd better not remember.
No, but I have the same haircut. So
right. So no, thank you for making time. And I know you're on holiday, so we won't keep you long here. We'll try and keep this to 30 minutes. Right? So let's dive right in.
Sure.
And where I want to actually start with is OakNorth.
Okay.
Right? I obviously work for a consulting firm. We advise a number of leading banks and neobanks in the region. One of the questions which keeps coming up is, what made OakNorth so different, right? When you look at the landscape, and I've lost count, we have somewhere in between 250 to 300 digital / neobanks, including the American version of the neobanks, who should not be banks because they neither have licenses or balance sheets, but we'll give them the benefit of the doubt. So what made OakNorth different? Because you achieved profitability very rapidly in your existence. And what's even more interesting is you achieved profitability in a segment which actually most people try and avoid. Please tell us, what was the secret sauce?
Well, I mean, that's a pretty big first question, right? It's not like how are you kind of question. I think I've got to answer that in multiple different ways, right? So I think the first one is the OakNorth founders, Rishi and Joel, have to take a lot of credit just for them specifically as people, because this is not their first go round. They've had a very successful exit before this. Joel actually 2 very successful exits, so they know what they're doing. They're not like, and I'm not saying it's detrimental that they're young guys, but they weren't having to figure it out on the job. They already knew how to start something up, how to scale it up, how to raise money, how to get to profitability, etc. So the first things first is you had two very successful entrepreneurs who were doing this second and third time around. I think if you then think about the segment they went for, a lot of digital banks, or like you said, the ones which aren't really banks, they've got someone else's license, that kind of thing, they're not actually wanting to bank. I feel like they're more wanting to build a cool product rather than a business, while Joel and Rishi wanted to build a bank.
Fair enough.
And a bank effectively collects money and lends it out and then keeps the difference as the profit. A lot of the people you mentioned in the 300 number don't do that. They rely on interchange fees, transaction fees, that kind of thing. So they're missing one big half of banking. So the second thing I will give to them is they absolutely wanted to set up a bank front to back from the beginning. Then in terms of the sector they wanted a bank to focus on, they believed they'd identified a underserved segment. And underserved generally means one thing: incorrectly priced as well. Mm-hmm. So not just they don't have access to the services a bank gives, but there's no competition either if you can figure it out, and therefore you can price it in a favorable manner for you as a bank. And the first example of this, I think, in the modern fintech era is obviously SoFi. And what Mike Cagney did there with even coming up with his own term in terms of the Henrys, right? In terms of the high earning, not yet rich, i.e. those studying good STEM type subjects at US colleges who had debt and no one would lend to. And he said, I'll lend to them. I think they're going to earn a load of money and they're very dependable. And he charged a good amount of money and it became very profitable. They, as entrepreneurs who ran previous businesses and had an exit, who also struggled to get access to lending, realized there was a segment like them of growth entrepreneurs. So not people who've been running a business for a very long time, that's very stable, but people who've come up with a good idea and that's growing. But traditional banks don't like growing. They like stable. So they identified an underserved segment. So if you take their track record, the fact that they wanted to run an actual bank with lending, and then they believed and correctly identified a segment that was underserved and therefore incorrectly priced as well, you put those together, that's, I guess, the base formula. Then you got to execute on that idea. And as the track record goes, I think they announced earnings again, I think it was 2 weeks ago, again, a very profitable year and another record year as well. That then speaks to track record of execution. And my time working for those two, I was learning every single day what it takes to be a successful founder, what it takes to be a successful entrepreneur, because the laser focus they would have on even, do we need to buy pens, and do we just buy Amazon basic pens rather than branded? Everything was thought about because that affects your profitability. And I'll give one example for you, because I've been speaking for too long here for one single question. I'll give you one example. OakNorth wants to lend money to SMEs. That's the segment we're talking about here. And they had to raise deposits to lend to those SMEs, and they wanted to raise those deposits in the most cost-effective manner, i.e. raise at the lowest interest rate, and then obviously on the other end, lend at the highest interest rate they can. And what most people do is they open current accounts because there's no interest on a current account. So in the US, a checking account, right? 0% interest. Surely that's the cheapest way to raise money to lend. OakNorth did the numbers and worked out, no, it's cheaper to do a pure savings account because the actual true the true overall cost of cost of funding is not just your interest rate, it's the operational cost as well on top of that. And then the fraud rate on top of that. And they worked out if you have a pure online savings account where you're literally doing a 1 year, let's say like a 1 year fixed term deposit, and you pay that interest annually, so you don't pay it monthly, you've effectively got an account where no one logs in. No one's going to ring you up. The interest rate is fixed. You're getting 1% in a year's time for your money. Why would you log in? Why would you ring it? So there's no activity. So you need a very, very small call center, very small amount of support. So the OPEX is massively shrunk.
Yep.
So your 1% interest rate is a very small extra amount of basis points you're putting in to cover the operational cost. And then if you factor that against a 0% current checking account, but the huge anti-money laundering, the client due diligence you have to do, every transaction has to be screened, they worked out that was 0.5% higher overall cost. And that's why OakNorth is successful. It's not just they identified a great segment. It's not just the founders have a great track record. they thought about every single aspect of the business, so they have the highest level of margin and therefore profitability.
I think that's a great takeaway for any founders. So Amir, that was insightful. Now, help me understand this, because if I'm not wrong, OakNorth Bank then spun off a part of their business and called it OakNorth Technologies. And again, I might have this number wrong, but I think there's more than a dozen, if nearly 20 other banks, some of them who compete with OakNorth arguably, who are actually leveraging that platform. Am I correct in that?
Sure. I mean, look, it's been a few years. I can't say exactly since I've left, so I can't say exactly what's going on. But when I was there, they had a very clear governance around the platform that they use internally, which is they will not sell it to competing UK banks, and they will never apply for a banking license outside the UK. So there is no competition. So they will just use the platform to sell to other banks outside of the UK.
Okay. All right. And what led to that decision? So,
I'm not the founder. I wasn't there at the beginning. My understanding of the situation is, obviously the founders had the idea and they were kind of ruminating on it. And then when they came to the first investing round, the investors themselves said, "Look, your bank is super exciting, and your margins are unheard of, and your lack of default is unheard of as well. So you've identified a very much underserved segment. No one's going bust. They're all good borrowers, etc. But it's still a bank. What we find more exciting in a way is the technology underneath that you're screening these borrowers with, and then you're monitoring them as well afterwards. So how you monitor your portfolio, is that something that could be productionized and spun off and made into a SaaS? And so I think it was their idea, and then investors themselves gave more impetus to it, and so it became a thing.
Excellent. So let's come to Callsign, right? That's the firm you're with today.
Yeah.
Right. So first question, things are going well at OakNorth.
Yeah.
OakNorth's grown year after year. So what was it that triggered the transition?
That's probably it's died now. But when I first announced I was leaving, that was probably the question I got asked every day. In fact, once that's a bit of a segue there. I'd just come back from my mum's house, and I was taking the kids out of the car, and I was about to walk into my house, and someone shouted at me from across the street, "Why'd you leave OakNorth?" I was like, "What?" I'm being stalked. So I've kind of got used to that question. I've kind of touched upon it. Rich and Joel, incredibly successful founders. So I joined at Series A at OakNorth. That's the start of my fintech career, Series A at OakNorth. But they were already a unicorn. So even though I was joined before SoftBank came in and the Series B and all the follow-on after that, it was still an incredibly valuable and successful and well-known company.
Sure.
And I was learning as much as I was doing on that job. And for selfish reasons, I wanted to go a bit earlier in a company's journey and do a little less learning and a bit more doing and adding, full value
fair enough.
to that journey. And it's very hard to replicate what we had at OakNorth, a UK-based company with international backing, with a global product. And I happened to come across what I thought was the same thing again. UK-based company, inspirational founder, great product that could be globalized. Series A, so they could afford to bring in outside executives, but a lot earlier in a journey, lower valuation. So there was just more upside for me in terms of value I could add and equity and everything else.
And I should correct myself when I introduced you. Obviously, I was wrong at saying that you started your career at OakNorth, so apologies for that. Let's talk a little bit about digital identities, right? Because the way I see it, there are a number of challenges and opportunities with digital identities. Also, if you could, for the viewers, sort of just, I guess, deconstruct or demystify the whole term digital identities and what it means. Right.
Sure. Okay, I mean, that's another big question.
You got to get used to these big questions for me, right?
I guess that's the theme
you should know me long enough now.
Right? Yeah, that's true. Okay, so let's take it really back then for that one.
Please.
Start of humanity and, just how people traded, whether it was precious metals or shells or cattle, you traded a good. And then it got to the point where people wanted to barter with credit. and someone would give you like a piece of leather or something as a shopkeeper saying, fine, I'm giving this good, but you need to come back and give me money that I've written on here, X amount of time. And the concept of credit came about. And then we got to checkbooks and things like that. And obviously Bank of America came out with the first credit card where literally they mailed it to people and said, here's some money on the card and pay us back later. We've gone through this concept very rapidly over the last kind of 100 years, or less so, even like 60, 70 years, where we wanted to be able to spend money or sell something we weren't actually carrying with us. And part of the problem with that was identity of, who's giving the money, who's buying the goods, who owes the money afterwards, etc. And what Bank of America did in essence was take your identity and put it into a piece of plastic with your name on it and your signature.
Sure.
And then that became a chip and pin, and now it's become an NFC, kind of tap it on with low value with the chip and pin afterwards. But in essence, that credit card is not just a way for you to spend, it's a proof of identity. Sure. Then we went online, and at first it was kind of an add-on, and then it became the primary channel in terms of web. Then the mobile became the primary channel. And we've been trying to replicate that credit card kind of experience online in terms of how you do digital identity. The problem is, you, Arjun, you go into a shop and you show a card and they see Arjun Singh on it, and then they look at you and go, yeah, you look like Arjun Singh. Does he also know his signature? Online, they can't see you. So how do you replicate that physical check as well as the signature and the PIN code and the tap check? That's what people have been working on for the last 10 years. And unfortunately, they were constrained by what technology they had. So the first things they did was they basically said, create your online account physically in a branch, then we'll post you how to log in. And then they thought about how can we digitize that process? And the key is digitize, right? Not how can we recreate it digitally. So it's all been about how do we digitize a paper process and make that paper process effectively online. And so we've come with these things like take a photo of your identification and, a selfie photo and a video. And all of these things are just digitization of a teller in a branch seeing you and recognizing you. And what companies like Callsign, who, we were founded in 2012, but the first 5 years were a bunch of PhDs basically taking their theories from their doctorates and saying, can we actually build this into a real product? So it's only really about 4 or 5 years now where technology's been available and evolving at that point, where we're saying we can identify you purely digitally. So not your physical biometric, but your basically your passive biometrics, your behavior, your device, your location. So what the concept of Callsign has introduced to the market, and is actually, and I'm not saying this is a sales pitch, I promise you, I won't be doing any selling on this podcast, is how to actually identify someone digitally positively. Because again, what people have been focusing on is trying to filter out bad, i.e., bad IP addresses, the phone's jailbroken, someone's got malware on a device. It's not about digital identity. It's not saying, I know online, this is Arjun who opened his account. What Callsign said is there's enough technology now that we can collect from your device and from how you're behaving to positively identify and say you are the same person who opened that account. So I'll give you some examples. When you open that account, you are in a location. You are on a machine. You are typing your email address in a certain way, moving your mouse in a certain way, or if it's on a phone, you are swiping and holding your phone in a certain direction, an angle, and a way to finger. And obviously there's a knowledge factor of a PIN code or an Android kind of pattern, or an email password combination. With those, triumvirate of authentication signals, your knowledge factor, your location, your device, a proof of possession, your behavior, your proof of inherence, proof it's inherently you who's typing, you can, in a non-reputable, so in a legally valid, can be used by banks for disputes way, say, yes, it was you that logged in. So we could say, when you come in to log in, Arjun's on a computer we've seen before. He's in his apartment during work hours. We know he works from home. He's normally in this location when he logs in. When he typed in his email and password, he grouped the letters of his email address in the way he always does. But that's something you do without thinking. It's subconscious, so the muscle memory guides how you type. So we can, after 3 attempts, create a behavioral model that will know it's you. literally from how you group the letters, the flight time of the keystrokes, how you do special characters, etc. Off top of that, we do the negative checks anyway, like everyone else does. The malware, the bot detection, liveness, or all that sort of stuff. And then we can positively say, it is you that's logging in. And the great thing about this is it removes all that legacy tech, like SMS, one-time password. There is nothing worse that you are trying to log in online on a website, and then you're getting a text to your mobile that you're going to have to type in on
the start off.
Right? And if you think about the history of SMS was designed as an unsecure way of sending a message to someone, not how to log in to a bank. And what have we had? We had the SS7 hacks 6-7 years ago probably now, that basically made all text messages vulnerable. We've now got SIM swap attacks, where, the news in the Saudi last week, where they're banning anyone opening online account. Again, SMS is unsecure, and we're still using it as a proof of identity. That's crazy. When we can just, from how you type, from your machine, from where you are, from just the combination of the knowledge, say, this is you. We don't need to do anything else. No step-ups.
Okay, just hold your thought. You mentioned Saudi, and I was going to bring that up in the next question. So obviously we've all read, Sam has expressed certain concerns regarding the way online accounts are opened. I hear it was associated with the particular sector. I don't need to mention the sector. So are you sort of, if I may say, godsend for the banks out there now? And I guess for the wider financial services sector, why not?
I believe the doctorate research that our founder and our research scientists we have as a company that we've commercialized into an identity product is the solution, and the discussions we've had in the region, we believe have confirmed it is a solution. Obviously, there's a transition needs to happen. You got to start with augmenting on top of what's there, and then when people are comfortable, you can remove the historic mechanisms.
But how do you get the central bank to be comfortable with that? In the sense, how do you get the central bank to move? Because I do not know. Well, I do not know how this new mandate, if I may call it, is going to manifest itself. Right? Yeah. It could put the brakes on a number of things. It could put the brakes on a number of sectors, right? Especially businesses which are digital only businesses, right? Which don't even have the physical infrastructure to accommodate for people to come and open bank accounts in any other manner. So how do you actually go about it? Are you in dialogue with the central banks? Are you speaking to them quite regularly?
Sure. No, that's a fair question. And
it's not just you.
It's everyone. It's a sector as a whole.
The sector as a whole.
So when Callsign first came up with this idea, it was new to the market. And then fortunately what happened in Europe is the PSD2 directive came in around payments, and everyone thinks PSD2 and they think open banking. And then obviously in the MENA region now we're seeing open banking sweeping across. What people forget is PSD2 are two regulations. They had open banking, and then they had SCA, strong customer authentication. So in Europe, they mandated not just the banks have to make their data available for other people to use for information or even payment initiation, and whether it's ASP or PASPs, but they also said you also have to secure how payments are done online with secure authentication. And they were very, very specific that not only does it have to be two-factor, but you have to use behavior. You have to have an inheritance factor. And so suddenly what we had built, and it was before I joined, had become regulatory mandated across all of Europe. And then we've seen a few other countries around the world adopt that. So for example, the Reserve Bank of India has got, actually I think one of the best written regulations I've ever seen, doing similar to SCA, but a lot of lessons learned incorporated in as well. And as a result of that, we've been invited pretty much by every central bank across the GCC and North Africa as well to come talk on a topic. And now what we're seeing is obviously the halting of certain activities and then recommendations coming into market that people need to start, before regulation or mandates, recommendations coming into market that people need to start augmenting their existing technologies with what Callsign has, i.e. behavioral biometrics, etc., which we think will evolve into regulations. But we would never talk on behalf of the regulator. We don't know what the regulator is thinking.
But I do think that the fact that you're engaging with the regulator, making them more aware of what exists, compare and contrast, I think it's essential because, at the end of the day, the regulator will play a key role in the future of finance in this part of the world, right? Whether it's open banking, whether it's digital identities or anything else. Let me switch topics, right? You've obviously, you're fortunate enough to have worked in different parts of the world, You've worked extensively in Europe. You have, over the last few years, or maybe longer, at least we've been talking for the last 4 or 5 years, we've been working in the region. So tell me, so obviously, there is a difference in terms of the maturity of the fintech, wider startup landscape in both those parts of the world, right? Are we sort of tracking a similar curve, and it's just that the MENA is the region, or the MEA region, whichever way you want to cut it, is sort of behind the curve, not necessarily because it's behind times, but because things have not matured? Or do you see us in this region take a very different trajectory? What's sort of your view? What are the differences you see in these markets? And one thing that I do want to caveat is people jump very quickly and sort of start blaming the regulator, right? I don't know how far that is true or not. I personally don't think the regulator alone makes or breaks the market. I think they've got my view is they always have the last laugh, right? But what's your perspective on this?
Sure, I think that's not a yes or no type question, right? It's a multifaceted answer you have to give there. Starting off with Europe, why did fintech take off in Europe? Well, obviously, London is a historic banking sector, and also London happened to have a very good technology center as well. So it was natural that in the startup space, London would focus specifically in fintech as opposed to, let's say, health tech or edutech or whatever else. So that there was that kind of history that helped London be at the start of it. What also happened was, and you'll only hear me say positive things about the UK regulator, we had a very progressive regulator that post the global financial crisis in, it was a long time ago now. When was it? 2009? They started opening things up. And regulatory sandboxes and PSD2 regulation, etc. They opened things up and they allowed startups access to data. They started giving e-money licenses. They allowed agent of e-money. So you could literally, two people in a bedroom set up a fintech based around a prepaid card without having your own license.
Worrying that you used the word bedroom, not the living room, but we'll stay.
Well, I think some people were literally. As an investor, I can tell you some of the calls I have, they are clearly in their bedroom, right? Their parents' house type thing. But yeah, so the regulator allowed all of that to happen. The other thing the regulator did, which is incredibly important, which people don't talk about, is access to liquidity. They created tax schemes that encouraged people to invest in literally pre-seed, like early stage startups that de-risked the money that you would put into them.
Yes, and I agree with you.
And that's opened up a huge amount of liquidity at the pre-seed and the seed stage. Obviously, Series A, B, C is a huge catch-up compared to America.
And the big players come in.
But if you have a startup and you only want to raise 6 figures in the UK, you can get access to that money very, very easily because of the tax incentives to invest in those type of companies. And then the visa schemes as well. It was obviously Brexit has kind of derailed a little bit and they're trying to correct that. But there was access to talent from outside the UK. So if we then map that to this region, and it is a region, it's not a country, right? It's definitely a region with different regulators, even within the UAE, right? There's different, 3 zones. Then you got the regulator as well, etc. How does that compare? Well, obviously, it started a bit later, so maturity-wise, it's behind on the curve, as you'd expect. You've then got to talk about talent. So I think there is entrepreneurial talent. Personally, I'm not sure there is enough engineering talent to match the entrepreneurial talent. What we are seeing as a company, just to bring back to Callsign, we've got a very good relationship with the regulator in Abu Dhabi, and they're allowing visas for talent, so you can bring engineers in. Because the worst thing you can have is there to be huge competition. Everyone want to hire Kareem's engineers, and there's 4 jobs for every Kareem engineer, and suddenly the salary is going to go crazy, and it's going to make someone who wants to do a startup without raising a lot of money unable to hire the tech talent they need.
I agree, but we've got the subcontinent not too far away, which does have a very deep bench of engineers.
Very, very deep bench, but we need to have that bench to have access to visas.
Agree. Yeah.
And not just, like for like, one in, one out. It needs to grow continuously because from what I can see, the entrepreneurs are there and they want to start up businesses, I'm not sure there's going to be, because every entrepreneur is going to need 10 engineers, right?
Yeah, totally.
So it's not like a one-for-one. You need a huge pipeline of talent coming in, whether it's from the subcontinent or whether it's even from Far East, like countries like Philippines, whatever. They need access. They need to be brought in constantly. And then you could argue tax schemes, but the tax regime here is incredibly favorable anyway. So you probably don't need that element to it. But so for me, to answer your question, it's behind on maturity. It has the entrepreneurs and the ideas to catch up and not just mimic, like a rocket internet business model where you look at what's happened in Europe, what's happened in America, let's do the Middle Eastern version of it. Actually new ideas.
And that's, for me, the big difference which needs to happen.
Yeah.
Here, right? And I think we're starting to see that.
We're starting to see that, definitely.
Right? I've been here about 10 years. And for the first 7 to 8 years, it was not just Me Too, but it was Me Too to the extent that people were not even localizing their businesses for the first few years.
Absolutely.
It was only when they were realizing they were not being able to get their point across that they were starting to localize.
Yep.
We've seen that localization sort of, I guess, wave happen. We're in the middle of that. But actually now we're starting to see businesses which are genuinely addressing the needs of the local customer, whether that's a business or a consumer customer. And I think that's very essential, right? No, sorry, I interrupted.
No. And you're spot on, right? So we're seeing that. And just to kind of add on that point, we're both going to be doing Saudi FinTech as mentors. And, I've seen the list of people who have been accepted. They're not copies, right? They are dealing with local ideas and local problems they want to solve. And not just that, local customs and culture, right? It's like, how do you do it in a Sharia compliant way? How do you, how do you account for the fact that you can't charge interest, things like that? That's not a Me Too.
No, it's not.
So that was really nice to see that from a list of companies I saw for Saudi FinTech, which I'm not going to mention because I don't think that's been published, but really innovative startups are coming out there. I still, though, will say, I personally am concerned about the amount of engineering talent and how we're going to keep that funnel. And again, it has to be an ever-expanding funnel coming into the region.
No, and I think I agree with you. And I think to scale, we need that talent, and we need that talent to come in constantly and consistently and add at a certain level of cadre, irrespective of where it comes from. Amir, I don't want to keep you here longer. I know you're on holiday.
Sure.
I know your family, your lovely family, your wife
will be
and your
very
3
happy
kids
with that.
are at a hotel. We should try and see each other for dinner while you're still here. The invitation is open.
Thank you.
If not, I'll see you back when you're here for Seamless. And I think we're going to host a fintech dinner, right? Which we did, I think, a few months ago when you were down, and that was actually excellent. And we got to meet some good friends and make some new friends.
Yeah.
Really appreciate you coming in. Thanks a lot, right? And best of luck with whatever's next.
Thank you. No, my pleasure. And
cheers.
I appreciate you inviting me on the show, and I've had the pleasure of listening in as well. So great to be part of the group you brought in. Thank you.
Yeah, it's good to be on the other side where I get to ask the questions. That's the best part about the show. All right. Cheers. Good.
No, thank you.
Have a good holiday.
Cheers.
All right. Take care. So I'd like to thank Amir Nooriala, who made time to come and join me at the show while he's on holiday. I think he had to get special permission from his wife. Hopefully he wouldn't be getting into too much trouble when he gets back home. I did keep it to 30 minutes. But I'd like to thank Amir. And with that, that's the end of today's show. And I'll see you next time. Bye-bye.